Welcome to Right Side Trading, where you can learn how to trade on the right side with confidence. Today is July 30th, 2016, and we'll bring you the weekly market review. But before we do that, let me direct your attention to our disclaimer page. If you go to our website all the way at the bottom, our risk and disclosure disclaimer statements. As always, we want to bring out and highlight this section right here, which says our products and services are provided solely for educational purposes. Our written and verbal statements, including those provided on our website by staff members, testimony individuals, affiliates, and clients, are personal judgments and should be regarded as such. These written and verbal statements do not constitute investment advice. The government does want us to let you know that we are not licensed financial investment advisors. So please, before you make any trading or investment decision, make sure you consult the advice of professional licensed financial advisors. We are just simply people that look at charts and give you an idea of what we see and think. All right. Now, that being said, let's go to the chart of the day. Okay. So this is the chart of the SPX, and what we are looking at is a market that has really done well for the month of July. Okay, for the month of July, this market has done really well. We see right here, I think July 1st started right there, and it ended up all the way up there. Okay, so very good month for the month of July. Actually, July broke multiple types of records, you know, over and over and over. We had all-time highs on the SPX. We had all-time highs on the Dow. We had a new closing high on the Dow and the SPX. Multiple times we had new closing highs on the Nasdaq as well. Let me show you what I'm talking about. If we look at the monthly chart, and just go to a monthly chart, see right here we have a new closing high, all-time closing high, and all-time high in the SPX. We have on the Nasdaq, we have an all-time closing high right here, all-time closing high in the Nasdaq. Okay, if you don't believe me, we can go back about 20 years. Let's see. All right, the highest close prior to that was somewhere around here. This green one right here. Prior to that was this one right here, and now we have surpassed that closing high. Notice that I did not say all-time high. I'm just talking about the closing high right there. Okay, so we are literally, let's see if I can bring this down for a second. I want to see how far we are from the all-time highs. We are just about 1%, should I say? Let's see here. Yeah, about 1% from the all-time highs on the Nasdaq. Okay. If you look at the Dow, okay, we can see that the Dow has made all-time highs as well as all-time closing highs this month again. So month of July 2016, or record months. All right. So the only one lagging us right now is the Russell. Okay. So the Russell is still behind, but you know it's coming up. It's getting there. The all-time closing high is not too far. We only like about, you know, say 2% away from the all-time closing high, but almost 3% away from the all-time closing high. And if we look at the all-time highs, we are about, let's say, 5%, 6% away from the all-time high on the Russell. Okay, so that's very good news. The last one that we look at, which is the one that is the most lagging of all, is the transportation index. It's shown, you know, a little bit signs of improvement, but not as aggressive as the others. Okay, so we'll just have to wait and see. The interesting thing is if the transportation index can close on a monthly basis above this red line right here, which would be let's see, 7,906. Let's see here, 7,944.11. That would be the number that we're looking at. Let me write this down. We're looking at 7,944.11 cents. Okay, if we can close we can close above that level right there, that will be a very positive sign in the Dow Transportation. Okay, that will be a very positive sign in the Dow Transportation. Okay, so let's go and see what we should be expecting going forward. Very interesting. We'll go back to the SPX, and I want to show you some things right here that is so interesting about the market. Okay, and that is the fact that we were waiting for the market to close above this level right here, and it has now finally done so. Okay, so that's very, very good news. Very, very good news. I mean, I have to take you back to like about 1983 to 1985 to show you how good of a news this is. Okay, and actually, you know what? Let me just go ahead and do that. Okay, in order to do that, I have to bring up another chart because, unfortunately, on Thinkorswim, it only goes back about 20 years, and so I can't go that far back. But I want to show you something very similar. Actually, you know, before I do that, let me do this. Here's the reason why this is very good news. Okay, one of the things that we look at when we're looking at the overall trend of a market, the major trend of a market, is by looking at the moving average. Okay, and if you go over here and we look at the 10 moving average, let's see, the 10 moving average. Okay. One of the interesting things is that as long as the market stays above the 10 moving average, that's a very strong trend, okay, strong uptrend. And if it stays below it, it's a very strong downtrend. So we can see in 2008 when the market was crashing, it stayed below this 10 moving average. At the end of middle of 2009, when it started going back up, it went and stayed above it. We had a little bit of dips around here, about a month or two, but then it came right back up again. Same thing right here, about 2, 3, 4 months. And then it came back up again, and as long as we stayed up there, the market was moving higher, okay? And that's one of the things I try to tell people. I said, look, at the end of the day, you know, if you don't know nothing else about trading, at least be an investor, and rather than turning your money over to brokers who are going to manage your money, just put on this simple moving average right here, okay? And just watch be patient, okay? Even if the market collapses and, you know, Armageddon starts all over again, as long as there was charts, just be patient. Wait for the market to come right back above that level, okay? And then when it does, just buy. It's as simple as that. Don't panic. Don't worry about anything else. Just buy. I mean, if you can even do it just blindly, just do it blindly. Just buy it, and honestly, just stay in until the month that you see that it closed below it. Take your profits at that point in time. If it goes back above it again, buy it. And then, you know, when it closes below it again, take your profit, okay? And stay away from when it's going lower, okay? Just stay away from it. There's people who will short it. That's fine. If you want to do that, that's fine too. But for the most part, just stay away from it. Keep your money safe. Wait for it to close back above it, and then just buy. Same thing when the market crashed in 2000 to 2003. You'd have been fine just staying away from it for a while. And then once it crossed above it, you could have stood in until we got to this point right here. You know, with a few exceptions where you'd have got out, but then got back in 2 months later, got out, got back in 2 months later. But at the end of the day, just wait till the end of each month and just see where the market closed, okay? And if it closes below it, get out. If it closes above it, get back in. Simple as that, okay? Very simple way. It's a slow way, but, you know, I like to use the analogy of the tortoise and the rabbit, okay? The rabbit can run really fast, and we all know what ended up happening. It never won the race, okay? But the tortoise, as slow as it was, just slow and steady, eventually it wins the race, okay? If you had done that from back here when it closed above it, let's see right here. You know, if you had done that back here in 2003 when the market went above it, when everybody was still wondering whether or not this market was going up or not, you know, you would have made a 58% return, about 60% return on your money in about, I want to say 5 years. You know, that's about on average 12% a year, okay? And, you know, you would have saved yourself from all this headache right here when the market dropped. And then again, if you got in, say, somewhere around here, you know, and even if you went over here, that's a 10% return in like 11 months, which is, you know, more than what the bank would do for you, okay? And again, if you went over here to say somewhere down here, that would have been a 6% in a 12-month period. You know, not the best, but you know what? That's okay. But then you got back in again over here, and you would have been in this market until we had this right here, which is another 51% return in about, 4 years. Okay, so overall, you can make some serious money if you know what you're doing. Okay, you can definitely make some good money if you know what you're doing, and this is just one of those simple ways of doing that. Okay. The next thing is, if you want to make it even better, or just not even better, I wouldn't necessarily say better. I would say more so just additional confirmation. Okay, just additional confirmation. If you want to have an additional confirmation, what I suggest that you do is then just go here, add the 20 simple moving average, and we're going to make this red. Okay, and we add that, and boom. Okay. And so if you want additional confirmation, is when the blue line crosses the red. Okay, if the blue line crosses the red, you know you definitely should just be staying in. Okay, if you have any questions about getting out, all right, by the time the blue line crosses back down below the red, you know you want to get out. Simple as that. Okay, it's a little bit slow. Don't get me wrong. Okay, so you're not catching the exact top, you're not catching the exact bottom, but that's not what this is about. This is about being in the meat of the move. Okay, if you got in over here, you would have literally been able to stay in all the way up until here, okay? It's a pretty decent move. You got the meat. Now, you didn't get in down here at this bottom right here. You didn't get in all the way, you didn't get out all the way at the top right here. You know, that's called greed, okay? There's even a passage in the Bible that talks about do not glean, the whole field. You know, you want to leave the edges so that other people can come in and have a meal off of what's on the edges of your field. So, if you don't know what that is, just go into the Bible. You can see that. But anyways, long story short, here's the good news. When the market was acting really bad in 2015, if we zoom in over here, we had the crossover. They call it the dead cross. Okay, it crossed down, and it looked like the market was going to go down, but now it's crossing over. So the interesting thing is, since that dead cross, the next month the market has been back up above the 10 moving average, which is the blue line. Okay, not only that, it's been staying above the blue line even when we had the Brexit, all that kind of stuff. I think Brexit was actually in July. Sorry, the market still ended up going higher. Okay, so maybe it was in June. I don't know. One of those things. One of those days when they had the Brexit thing. But even with all this calamity, all the stories about how the market is going to go down and the bubble is going to bust and everything, this is why we like to always say we just see, we see, we know, and we expect. Okay, so what I see here is a market that is above the 10 moving average, which is the blue line right here, and now the 10 is crossing the 20, which is also a very positive sign. Okay, the last time we had a 10 cross 20 was back in 2009, end of 2009, beginning 2010. And, so many people I hear will talk about how, they wish they were in the market and just stayed bullish the whole time. Well, here's an opportunity to do so. The time before that was in 2003, when the market recovered from the bearishness of 2003, and you would have had a very good ride just staying in. Very simple, very, very simple way of just looking at the market. But here's the interesting thing again. Not only did we close higher and make all-time highs and all that stuff, and there's all those bearish, sentiment, gurus that are out here saying, oh yeah, the market is going to bust, the market is going to bust, just like they said back here in 2013 when the market was getting up to like all-time highs, oh, the market is going to bust, and here we are, 3 years later, and the market is even higher. Okay. If it does, these indicators will let us know. We might be a little late to the party, but it will still let us know. You don't have to worry about losing everything, okay? Again, people who lose everything are people who don't know what to look for and what to do. Okay, so enough about beating that dead horse. The whole point here is we now have the blue crossing back over the red, which is a very, very, very good sign. At the same time that this stock, the market is breaking out into new highs and new territory. Okay, So what I want to do is take it back to 1985 because it's a very similar pattern, a very similar chart took place during that time. And that was, let's go right here. Let me see if we can do this. Right there, okay? So this is kind of like what we're looking at right now, all right? And that is the fact that, let me take this off so you guys can see the full chart in and of itself. In 1983 to about, I want to say 1985, okay, the market kind of pretty much did the same thing that we see right now. We see that the blue line crossed the red back here, and then the market went flat, started coming down, all right. Price closed below the blue line, all right, right here. We had prices closing below the blue line. It stayed below it for a while. At some point, you know, it even crossed below the red line. The blue line crossed below the red line. Okay, we had all that stuff going on, and then finally, we had a blue line. We don't see it right here, ready to cross back above the red line at the same time when price was now making all-time highs at that point in time. Okay, back in January of 1985, the market made an all-time high at that time. There were pundits. I can almost guarantee you that there were probably pundits that were bearish pundits that were saying, oh, it's a bubble, it's a bubble, it's a bubble. Same thing that you're hearing today. It's a bubble, it's a bubble, it's a bubble. Oh, what's going on in China, and the economy is not the same like it used to be, and what's going on in Russia, and what's going on in all around the world, and the government doing this, and the government doing that, and all this stuff, okay? Probably the same story. Headlines are probably the same, okay? And nobody in their wildest imagination would have thought, hey, you know, as the Dow's at 180, which is, you know, around about $179, $180, you know, that it would ever keep on going higher. And now we're at, well, I'm sorry, this is not the Dow. We're looking at the SPX. The SPX at 170, 180. And in their wildest imagination, if you told anybody back then that, oh, wow, you know, I see the SPX in 30 years, you know, being up to like 2,000, or 30, 40 years, you know, it'll be up to 2,000. About 30 years, they were like, no, there's no way. That's impossible. That's impossible. But here we are, almost 30 years exactly later, 31 years to be exact, and it's already above 2,000, okay? So it's just one of those things, all right? But what I want to show you is the similarities in what we see right here, okay? The similarities in what we see right here is the fact that the Dow, the SPX, took about 20 months, if you start counting from here, okay? It took about 20 months, all right? 20 months. Okay? From this point right here all the way to this point right there. That was about 20 months, okay? Actually, it was 21 in this case, 21 to be exact, okay? Took about 21 months, all right? And what we then see is cover this page. Let's see. We have to go back in here and see what happened. Let's do some stuff here real quick. Setting. Let's go to white. I like the white background better. And let's take this to the bumpy chart. Okay. And what we're going to do is we're going to zoom in to 1985. SPX. Okay. there. And what we're talking about is add in the indicator, which is the moving average. Moving average. We want that one, and we'll change this to the 10. Okay. And then we want to add another indicator, and we want to add the moving average again. And this one, we're going to change this to 50. Let's color that red, and we change that to 20. Sorry. There you go. All right, so now we're back. Okay, so this is where we were talking about. And what ended up happening is we see a market that rallied from that point on, okay, until we had a crash in 1987, the famous crash of 1987 in October of 1987. But what we were looking at was this point right here where it crossed back over again, okay, the blue crossing back over to the red. And if anybody was to tell you, oh, wow, we're going to have a big run for quite some time, you would think that they were, you know, people who could predict the future. It's not that you could predict the future, but the probabilities are very high when these crosses take place. You know, some people say it's gambling and all that stuff. It's not. You know, it's just you play a game of probabilities. Everything in life is about probabilities, okay? And so from this point, you know, here, all the way to this point right here, okay, before it dropped, it was about, I want to say about, let's see, I think it was about, how many months was that? It was from January 1985 to August of 1987, okay? And, you know, you would have made about, you know, about an 83% return in your trades if you had got in from this point right there all the way to this point right here, okay? And even if you got in over here and got out after the crash took place right there, okay? If you had got out over there, you would still would have walked away with a 45% return, okay? You would still walked away with a 45% return from, you know, January 1985 to August of 1987. So we talked about approximately 2.5 years, okay? Approximately 2.5 years, you know, bringing in these type of returns, okay? That's kind of like what happens. So all I'm saying is now that the market is now back to the same position, you know, this is what we see, and it's very hard to envision the future, okay? But again, if I can just take you back here and just imagine this is what is about to happen going forward, okay? This is what we anticipate going forward, okay? Is this move in price going forward, all right? We had a breakout. Yes, we know all the stuff that's happening around the world, just like it was happening back then, okay? But the charts are showing us signs that things are trying to go higher, okay? So what you can't see right now is how it's going to end 2 years from today. But what I am saying is that here is a visual into the future by looking into the past, okay? History has a way of repeating itself. And right now, it seems like history is trying to repeat itself again. So we'll end on that note. It's been a little bit longer than we anticipated. But the cool thing about this is the fact that there are signs in the market that is showing that we're trying to go higher. And so all I say is, you know, learn how to read the charts. We teach that. Again, if you go to our website, you will see many things that we teach. We are actually going to be coming out with a new site with improvements that we're trying to make. Take the time to look at this stuff, you know, because there's a lot of information. You know, sign up for our courses, sign up for our private mentorships. All our people that have signed up for our mentorships are doing phenomenally well. They've seen things about the market that they would have never learned in college or anywhere else, okay, because we keep it 100% real, okay? We show you what the reality is. And if you notice, in all our videos that we talk about, we don't talk about what's happened back here in the past. We talk about how to make money in the future. And if we ever reference anything in the past, it's to show you that, okay, based on what we see right here, we still always go back to the future and show you what's about to happen, okay? So most of what we talked about, yes, was what happened in the past, but it's because we're trying to show you that similar patterns are happening again right now that is telling us this is where the market is going to go, okay? Not just, oh, this is where you want to buy and you should have sold right here. Anybody can do that in hindsight. But we see things right now that are showing us that it's ready to go higher. So just be prepared for that, okay? Be prepared for that. All right, ladies and gentlemen, we're going to go ahead and wrap it up over there by taking you back to our website. And like we always say, remember to trade on the right side with confidence.